Welcome. It's an opportunity now to take a look at some of the more traded areas of the market in some more detail with our guest today, Zak Mir from Zak's Traders Cafe. Welcome. It's been a while since we've spoken to you. It's good to have you back on. Since we last spoke, there's been a lot of enthusiasm, I should say, about Bitcoin. We've never had a chance to talk about it before, but you wanted to take a look at the chart of Bitcoin today. What do you like about Bitcoin, first of all?
I think it's like probably my favorite market before Bitcoin arrived was the DAX, and this is like the DAX squared or the DAX super DAX. So has all the movement. If you're a day trader or even a night trader, it moves 24 hours a day, 7 days a week. It really is a trader's paradise. Obviously, it is very volatile, but for traders, that's what they're looking for.
Well, this is interesting. I mean, let's take a look at the chart because it is volatile. I mean, it can move 10 to 12% in a day. From a technical point of view, from a trading point of view, where do you put your stop? I mean, obviously a stop is going to be different from a day-to-day basis, but you've got to have your stop so far away in order not to be stopped out on a day of volatility.
Yes, I think what it is, I mean, the main problem that, say, beginners in trading have is that they trade too big. The position size is too big. Here, you have to trade probably half or a third of the the value that you would normally be trading. So if you're trading DAX for £5 a point, trading this £1 or £2 a point, let's say. Right. Much wider stop losses, but obviously because there's more movement, that compensates for the smaller positions. So people obviously here. I mean, we had the situation I think the other month where it fell from 5,000 to 3,000. Yeah. You can't allow something like that just to get you out of the trading business. So much more than normal, and just have a belief that even though the position size is very small, it's the equivalent to £1 a point. Yeah. There's just much more volatility to be had.
Do you use trailing stops here? I mean, we've got for this particular chart here is this large move up. In fact, if we put a percentage move on that, here we are. There we are. 15th September down at what 29.80. Here we are now up 101% in just about 6 weeks or so. Do you have a trailing stop?
I don't think you can. I mean, for me, I don't think you can really do that. I mean, you can see that you've got those long candles there. There was one a few days ago, where it went down towards I think 51.50. I was watching it at the time, and then right back up again. So basically, this market is there to try and get those. What I normally say is that the stronger the trend, the rougher the ride, and this is really sort of making that saying proving that saying correct. So really, it's intraday trading. The stop losses, probably $100 or more, from the beginning, and then as soon as you can maybe get the stop loss in tight, do so. And break-even stop is obviously the best scenario.
Yeah. We've spoken about big round numbers in technical analysis before, and here we are now at $6,000. In fact, we are trading just below that. Are you long Bitcoin, first of all?
I think that, in fact, that the reality of day trading it is that the trend is not really apparent. I mean, you have steady moves higher, but then all of a sudden, like for instance, I think it was yesterday morning at 6 o'clock, it fell $200, $300. So the trend, the longer trend, doesn't actually become that helpful in these situations. You've got to have an intraday strategy. Maybe you're trading with Bollinger Bands, or you're trading with RSI on an hourly chart or a 5-minute chart. That's the way. I mean, I think in a way you need to put that longer trend out of your mind. Yeah.
Okay. So what's your position at the moment? What do you?
I think position here is that at the moment it looks as though from that rising trend channel from May that 6,000, 6,100, 6,200 is the near-term peak. But the way that the momentum is here, with as you can see all the way up, you've got new lows coming in at old resistance, so that, in fact, the last low at 51.50 was above the high that we had in August. So really, when you see a market like that, any setbacks are really, buying opportunities.
Yeah, okay, buying the dips. Big dips they are too. Let's complement this with a look at what's happening with gold. Before we went to air, we spoke a little bit about this, and I know that you wanted to follow Bitcoin with gold. Gold is quite a heavily traded chart on the IG platform. Whereabouts are we with gold and what's happening at the moment?
Well, I think the first thing to say is that I think since I came on, obviously, came on last, Bitcoin beat gold. I think it was around $13. I can't
That's
remember
right,
when it was,
yeah,
but that for me Bitcoin overtaking gold. Bitcoin's accused of being a scam and a fraud. So if something which is hot air beats the most valuable or most revered commodities, I think there's a message there. I think really Bitcoin is behaving as people expected gold to be by now. We had the peak at $1,900. If you'd asked somebody in 2011, where do you think the gold will be by 2017, they would have told you 6,000, 8,000. So Bitcoin is behaving to me like the new gold.
Do you think there's money being taken out of gold because of Bitcoin? When you're actually buying the underlying commodity, you're actually buying the market. Do you think that more people have moved money out of gold to pay for their Bitcoin positions? I
don't think that's the case yet, because obviously Bitcoin as a whole market, it's only $100 billion, which is nothing. It's just like it's not even it's like a big FTSE company. We're nowhere yet. We've just begun, I think, really on that scale, unless it can be proven to be a fraud. We're looking at $1 trillion. We're looking at a much bigger market, and obviously gold is hundreds of times bigger than Bitcoin. So I don't think that process has started yet, but over the next few months, maybe it could.
So looking at this chart, are you long or short gold? I mean, it's been in this sort of a longer term uptrend, but we're getting at some interesting levels.
I think I would be, you can see that there's generally higher, it's a sort of a slow squeeze higher, but I would actually step back from that and just say we're really in a range of 1220 to 1350. And unless we see something outside that, and unless you're a real keen gold trader, I would just assume the range, and we're in the middle of the range at the moment. All the fundamentals seem to be either neutral on gold or against it, with the interest rates, the Trump tax cuts, stronger dollar obviously at the moment. So I think for me the most telling aspect here was when we had the possibility of North Korea starting some third World War III, the gold price went up like $20. I mean it's not really acting like gold anymore. I want to pull this in a little bit. We've been talking a lot to clients about positioning here, and in fact we've like this or not, I'm going to mention it, but we're taking a Fibonacci from here up to that high point there. In fact, we are now we're just knocking on the door of 76.4% retracement. How important is Fibonacci to you? A lot of clients talk about it. I think it's obviously important, and the markets do move according to those parameters. I think that here, as I said, 1220, the main support. It does look as though there's support in that 1260 area with that moving average. I think that's a 200-day line. I sort of prefer the moving averages because they're rather more dynamic, and you can see that they have a tendency of coinciding with Fibonacci anyway. So they sort of do your homework for you. But for me, the 200-day average, that really needs to hold to give the gold any serious contention in terms of being a bull situation at the moment.
Yeah. So your trade here on gold?
Buy towards 1260.
Buy towards 1260 with your stop below the bottom of the Fibonacci.
Just below that, just like 1245, something like that.
Yeah, fine. Okay, all right, that's great. Let's move on and take a look in some more detail more about what's happening in the market, because one of the other charts you want to talk about is dollar yen. Overnight, and indeed over the weekend, we had this big win, which I think polls again proved not too accurate, because they were looking for Abe to lose 2/3 majority, but in fact, as it came through, a swinging victory.
Yes, it was a snap election that worked. Maybe Theresa May could have learnt from that. But I think the situation in Japan is, it's a bit of a one-horse race, really, and he's become, super Abe, really, in terms of what he's done. Hasn't delivered quite as much as maybe people were expecting all those years ago, but obviously dollar yen is, above 100, above 110, and so at least part of the work, part of the reflation and the growth strategy of Abe has come through.
Yeah, got a little bit of an island trade here. We've got Sunday trade actually on here as well, but there's a little bit of a gap opened up from Friday's close. How do you trade this?
The gap higher, I think, is a gap of surprise that the result was so good. Gaps tend to be a surprise, exclamations of surprise in the market, and I would think that people were caught short of dollar yen, and I think we'll see a squeeze at least towards that resistance there, 114.40 or so.
Yeah, on the RSI far right hand side, you've asked to draw a little straight line here, which is the 50 of the 14-day RSI. How do you trade the RSI here?
Well, basically, I like to make the assumption that above RSI 50, a market's in a bull trend, below it's in a bear trend. You can see that trend changed in the middle of September. So this market has really been anticipating higher prices for over a month. And even with that dip the other week, the RSI still managed to hold on to the 50 level.
So you're long this?
So it's just, I mean, really, there's still, it looks as though there's another a yen and a half on that basis of gas in the tank, let's say, on the basis of the RSI.
Yeah, fine. Okie dokie. All right, that's great. Let's move on to the FTSE 100 and ask what's going on the FTSE 100. We've not all the other, bit of an exaggeration, a lot of the other benchmarks around the world have hit record highs. German DAX you're talking about earlier on. US markets almost on a daily basis now going to record highs. We've got 20-odd year highs for the Nikkei. Yeah. We've got money going into the Hong Kong markets. It's just, but the FTSE seems to be stalling.
No, I mean, it's obviously stalling because there's multiple factors there. The Brexit mess, Theresa May, obviously the weak leadership. You've got the squeeze on wages, you've got inflation, the prospect of interest rates being hiked, I don't believe it, but prospects of that. Yeah. So I think it's actually quite a result to see the FTSE near record highs again, but it probably should be 8,000 or 8,500 if it was in line with the other markets. Yeah. So really it's an underperforming market. I would expect, I mean, it's a very sour year when you don't see a rally towards the second half of November, mid-December. So I would expect to see the break towards 8,000 as a closing 2017 level, almost whatever happens.
Okay, fine. So 500 points in the tank from here. You go long here. Where would you put your stop? We got this low point we saw Thursday, 19th of October, which was just a one-day spike. And then we got this support around about the 7,400 level. What was your? Yes,
I mean, those long-tailed candles are very useful. So a stop loss, 20, 30 points below that should probably do the trick. Yeah. Or otherwise, just maybe wait for the break. The RSI at 63 is still moderate, so I would expect this market to just gradually drift higher. Yeah.
Fine. Okay, jolly good. When I asked you if you wanted to do one particular stock, you said, oh yeah, definitely Spire Healthcare. You've been writing a lot about this recently.
Yes, I mean, it was a story really from the summer with speculation regarding Mediclinic's 29.9% stake. As anybody in M&A will know, a company, 29.9% is above that. You've got to make a bid for the whole company, and you don't normally go back from that. So it was going to happen. The confirmation of talks that we've had, but unfortunately, in the meantime, we had this scandal regarding Spire, it's making a 27.2 million payout, and that hit the share price. But you can see since then, I wrote about the shares when the RSI was around, I think you can see there, 11, 12 out of 100, which is about the lowest you see if a company's not going bust, let's put it that way. So the shares were around £2.30 then in September. They only went down another 10 pence before turning around. You've got that beautiful U-shaped recovery, which is sort of saucer-shaped recovery, which is a classic technical analysis feature. RSI pushed through 50 last week, and I wrote about the shares then as well. So it was a technical buy, and obviously the news from the Sunday Times and other places that there are talks regarding a possible deal has helped the stock rise today. Given the scandal, you would have thought the Spire would be rather more amenable to being taken over now than it was before.
Well, the board said, I think today, that they still don't believe there's full value in the offer. So I guess they're just holding out for some bigger offer.
I mean, the other point is Mediclinic, I think they paid £3.60, and you can see that the shares topped out around £3.60. Yeah. I would suggest that would be the minimum we'll see here on the upside as a guess, even though the shares are overbought. And obviously, it would be nice if, you would assume that Spire would be holding out for more than that anyway.
Yeah, fine. And going back to your RSI reading at the bottom here, it's overbought technically, but you like it when it's just
I think that pattern of the gap, the island bottom there, which is a saucer reversal, I mean, that's that's textbot material. I mean, I would like to keep that for a book in future.
Long trade on here, and your stop would be below. This is the bottom part of the saucer?
No. At the moment, I would go by that moving average there. I think you've got one there, that's at £2.76, something like that. That's 50, enough. I mean, there's no point risking more than that at this stage.
Fine, sure. Okay, right. Zach, it's a pleasure. Thanks indeed for joining us. Zak Mir from Zak Traders Cafe. We are looking there at the moves in Bitcoin and gold, FTSE, dollar yen, and also Spire Healthcare. Some of Zak's picks to look out for in the weeks ahead.